Now let's go through an example of the cash flow statement. Let's take Godfrey and Molly. They're a young couple and with no children, and Godfrey, if we start with their income, Godfrey earns, I'm just going to put G for Godfrey, $65,000 a year. And Molly earns $18,350 a year. And then Godfrey also earns commissions of $3,050. And then they have some investment income. This would be interest on savings accounts and dividends from an investment portfolio. And that comes to $315. So that gives them, on an annual basis, total income of $86,715. Now on the expense side, they have fixed expenses that include things like their mortgage payment, their car payments, their insurance premiums, and loan payments. These total fixed expenses come out to $44,404. And then their variable expenses, and those are the things that they have a little bit more control over. So if times got tight, they could cut back on these things. Those are things like utilities, food, including going out to eat, new clothes and shoes, trips to the spa, or going on vacation, or gifts for each other or for others. And those total variable expenses come out to $20,760. So their total expenses would be the fixed plus the variable, and that is $65,164. So now what we need to know is, do they have a surplus or a deficit? Well, I know they're going to have a surplus because their income is greater than their expenses. So income is greater than expenses, so I know it's going to be a surplus. It would only be a deficit if income was less than expenses. So their surplus is the difference between the two, or $86,715 minus $164, or the surplus is $21,551. So what we know about Godfrey and Molly is that on an annual basis, they have enough money to cover their expenses at their current standard of living. And that means that they have money left over to either add to their net worth by saving or investing, or they could incur a few more expenses, live a little bit more lavishly. But what we do know is that on an annual basis, they're living within their means. Now, as a practical matter, it may be helpful for them to know what their cash flow looks like on a monthly basis, because they may have some income that's not monthly, and so their income isn't the same every month. And if their expenses are the same every month, then there could be months where they have a cash shortfall. And the same could be true about their expenses. Maybe their income is level, but there are some months where the expenses are higher. And so for those reasons, it might be useful for the counselor to help this couple put together a monthly cash flow statement in addition to this annual cash flow statement.